What do you think?
I would say hence.
What could we do to figure this out?
I mean, we could do a loop technically, right? And then
Okay.
just
Yeah.
in the loop, like kind of always like increase f and
Yeah. So what function could we use to loop through different f's? NumPy or linspace. So let's go, say, from 0.1 to 10, and we do this in 100 steps. And we go P and L, and then we print F and P and L and run it. And so look at this. It's interesting, isn't it? It actually goes up and then it comes back down again. So let's just record this. So we just say P and L's equals this, yeah? And then we go P and L's dot append P and L, yeah? And then what we do is we do a plot, plt.plot. And we just take this linspace here because we already know this. And then we go P&Ls. There you go. Now look at that.
Interesting.
How cool is it? So actually our maximum is here somewhere at, I don't know, 3.5 or something like this, 3.2. Yeah. So we get the maximum not if we invest more and more. You can see we can invest more, but then at some point it actually drops off quite steeply. And then if we invest more than, say, 8 times. So what's interesting here is this, you remember? Where did we sit with our 51 to 49 coin toss in this?
At 0.2% somewhere, I think.
Yeah, and where are we here?
Yeah, at like 3.5, as you said, something.
Yeah. But what 3.5? But what is that in percent?
350.
Yeah, amazing, isn't it? Like for this other one, we could only invest 2%, but here we can actually invest more than we have. Yeah. So if we have 100% money, we can actually say, well, we should be investing 350% to maximize. And you know what that's called? If we actually invest more than we have?
Leverage?
There's a word for it. It's called leverage. Bam. Exactly. So what we're doing here is, if we wanted to maximize our profit, we actually use leverage. Now, I'm not recommending that because I show you why. Now let's just plot this. So let's just say, for the sake of the argument, this is 3. We use, let's just say 3.4, right? So what we do is we just plug in this number. It's not precise. .prod .plot. What do you think we're gonna see? Do we see like a nice smooth curve upwards, or what will we see in terms of the P&L curve?
To be honest, I think it will be like kind of like a zigzag where we have like ups and downs, but like extreme.
Okay, let's do this. Oh, we have to do the cumulative product. Yeah, look at that. It's like violent. It actually goes up and then it drops back down, like in the final stages, right? It's like a crazy violent run. Yeah. So it's not for the faint-hearted. If we wanted to do this, because you start with this, you make a 30x 30 times profit, but then you lose like a lot of that again, and you end up with a 10 times or 50 times profit. It's still not bad, but you basically lose hundreds of percent of your starting capital again.
Yeah.
And you end up with a 15x. And the other problem is, you couldn't have known this in advance, right?
Yep.
So let's just do this. And instead of getting the optimal fraction for the whole period, we go back and we exclude the last, let's just say 4 years, which is 1,000 trading days. Yeah. So we go dot ilog. Yeah. And we go until minus 1,000. So we exclude the last 1,000 trading days. And then let's see what this gives us. See this?
Mm-hmm.
This actually tells us to use more leverage. Yeah.
Mm-hmm.
It's like 4.7 or so. Yeah. So if we were to basically go 1,000 days earlier, it says 4.7. And you know, as we've seen before, when we use 4.7, we're actually not ending up with something that is really that great. See, we only get, I mean, it's still okay. We get a 10x, but it's nowhere near as good as it was. So you got to be extremely careful, right? You don't want to apply like, you know, the maximum leverage. It's kind of crazy to do that. But one thing you could do is technically, you could actually calculate at any given moment the leverage that you want to use, you know, and you could actually scale your portfolio up and down over time. So what you effectively do is you run through this code and you basically go, oh, what's the leverage I need to use at any given moment to optimize that?